Damn, Brick, you look hella handsome today.
Thank you very much. Okay, I'm down to roll.
What's up, everyone? Welcome back to another episode of 0x Research. If you're listening to this podcast, there's a good chance that, like Dan and I, you believe the future of finance is on the blockchain. And we're excited that London is becoming a global hub for blockchain innovation and institutional adoption of digital assets. That's why we're pumped to host the 2024 Digital Asset Summit in London this March. Don't miss your chance to get ahead of the curve. Later in this episode, we'll tell you how you can save 20% off on your ticket.
All right, everyone, welcome back to another episode of 0x Research. I'm joined today by Matt, Ren, and Brick to bring you guys another Analyst episode. We're recording this on January 2nd, so Happy New Year, everyone. Hope you enjoyed the holidays, took some time off, touched some grass, got away from the screens because we are at the start of a bull market and things are about to get fun, but very, very busy. So, guys, thanks for joining me today. We got a lot lined up on the slate to jam on. A couple good things. Maybe we start this with a news segment round, and then we'll get into Hot Seat, Cool Throne. Let's start with the Avalanche announcement that the foundation is going to be essentially the foundation is longing meme coins for whatever that's worth. So they put out a tweet announcement early in the middle of last week that reads, a portion of it reads, the Avalanche Foundation intends to start using Culture Catalyst, which is this program that they have within the foundation, to recognize and encourage the culture and fun symbolized by meme coins by purchasing select Avalanche-based meme coins to create a collection. So they took a lot of backlash from this, unsurprisingly, from crypto Twitter. First and foremost, crypto Twitter will hate on you for doing anything and everything. But this one may or may not have been deserved. So some viewed this as like a sign of desperation and an attempt to continue being relevant. Others were like, oh, no, this is a great idea. The signs of being a thought leader and doing things people haven't done before. If you put this in retro or fit this into the kind of a few of the other PR mishaps that Avalanche has had earlier this year. They even openly recognized that the whole Stars Arena event was a bit of a disaster. And for those that don't know, Stars Arena was like essentially a Friendtech clone, but built on Avalanche. And the foundation kind of came out. Foundation and core members of the team came out and really supported this team and kind of doubled down after a few exploits, and it continually got exploited. And it's really just a bit of a PR disaster. But net, I think that this is on the meme coin announcement. It's definitely a bit strange. I don't know if I necessarily want my core founders really promoting meme coins. I mean, yes, they're doing great things, and yes, they're focused on things other than meme coins, but like, I don't know, that kind of just feels like this dark side of crypto you just have to let exist, and almost like you don't acknowledge it exists in a lot of ways. I saw I can't remember who or what it was, but basically it was this institutional investor, and he was just ranting about how much he hates meme coins because it makes him feel like, this industry is a joke. And when he goes and talks to professional investors, like, it's always this thing he has to try to, talk his way out of. And I definitely get that sentiment. But at the same time, I think it's just gambling, and gambling is a humongous industry. But we definitely don't talk about it as gambling. We talk about it as trading. And I think that's like a huge distinction that really needs to get made over the long run. But for now, it is very interesting to see the foundation kind of come out and make this announcement. Definitely made a splash, if nothing less. But I'm curious if you guys have any thoughts on the Avalanche Foundation supporting the meme coin adoption on their chain.
I think to some extent, meme coins have this, I hate to say this, but they almost have this like baseball card like tendency where you could see how long term, like maybe some meme coins stick around. It's like a historical thing where it's, it was something that was originally created on Avalanche, but Avalanche continues its success and becomes a predominant L1 in the crypto ecosystem. Like maybe these OG meme coins that really helped build community and then became kind of like a way of showing off that you're like a big part of the community or whatever. Like maybe they'll continue to accrue interest over time. I don't think you can look at them like an investment, maybe like a collectible, if that. At the end of the day, I guess we have seen some meme coins like Bonk go out and create actual products that intend to drive fundamental revenue back to the token in some way. So like for all we know, Cock or whatever it might be could go ahead and do that. I actually think there's a good
Cock is a hot meme coin on Solana. I feel like we just need to clarify that. Sorry, Matt, continue.
On Avalanche, not Solana.
Oh, sorry. You said Bonk. Put Solana in my head. Good call. Cock is the predominant new meme coin on Avalanche. Thank you, Ren.
Yeah, up some 20x in a month. It's spelled COQ, so don't worry. There's nothing inappropriate about it. It's cock inu, INU, so whatever. Maybe that. Let's continue. There's a chance that these meme coins could like continue see success and interest in the long term in the same way that like any speculative market of something that doesn't actually have value continues to hold up. Like we saw this very predominantly in COVID with like a lot of these collectible items, but at the same time, like I do see the point of you don't necessarily want your foundation that's supposed to be building out the ecosystem for that to be their main primary goal. I guess I could see, it's cool. You're bootstrapping a community of meme people engaging, on Twitter and maybe in your forums and whatnot. So like there's some value there. But at the end of the day, like, yeah, they you know what they do though? They do also go make deals with big TradFi institutions and stuff. So I can't knock the Avalanche Foundation. I think they do a great job. But yeah, it was an interesting decision to say the least.
I think at this point, Avalanche should really lean into the institutional narrative since that's kind of what they've been going for. And actually, I feel like have seen a decent amount of success in the past year, leaning into that institutional subnet narrative and along with the validator, tokenomics, VHA, whether that's coming along or not. I feel like they should just focus on that. Their name was plastered on that JP Morgan Onyx Layer Zero sort of like testing thing, and that was one of the a very like prominent use case which made sense for Avalanche subnets. And I don't know, like, yeah, I want to say buying meme coins feels a bit desperate. Like Avalanche DeFi's pretty dead. You've seen a lot of cases where DeFi founders on Avalanche moved on to other chains, most notably being Trader Joe, who started on Avalanche and eventually migrated to Arbitrum, and they're going to launch something new on Mantle. And obviously, I think people will have other concerns. At some point, Avalanche Foundation is probably going to buy a meme coin that's going to rug and it's going to look horribly on them, for, just like the Stars Arena thing. Um, Obviously, there's probably going to be insider trading fears too. Like, it's not hard to, if you're on the Avalanche Foundation team, buy a meme coin before the foundation buys it and sends it like 500%. So, yeah, I'm not a fan. I think meme coins have a place within like each of their ecosystems, but the foundation buying it, like, I don't think that's a good look.
Yeah, my first reaction to this was kind of, or you guys nailed it pretty much with your takes, but yeah, my first reaction was getting the vibe of Avalanche being a boomer who wants to like join the rest of the party with the younger people and like kind of forces themselves into the whole thing. And they had a great kind of organic narrative going on with the CEO Q token. But now I don't know. It kind of ruined the vibe for me, but we'll see what happens.
Yeah, I like the call about working with like JP Morgan and really focusing on like institutional subnet adoption. I think they've had a lot of focus on that for a long time, and I don't think that's changed one bit. So it's honestly kind of hard, it feels like, to do both ends of the spectrum so hard, right? Like an institutional KYC subnet on one side, and the other side is, a meme coin dubbed cockadoo. Like, it's hard to do both. Like, you kind of got to pick a lane and go all in some regard, but I don't know. If you really like, memes are culture. I think NFTs last cycle proved that. And meme coins are really just the same thing as, a 10K PFP in a lot of different ways. So I don't hate it. I don't love it. It just kind of is, in my opinion. But yeah, I don't think they should be shocked at the backlash they got on Twitter. But, if they're supporting their community, and that's what, the goal of the culture catalyst probably is to support what the community is doing. If that's what the community is doing, then that's kind of what you got to support ultimately. So that's kind of the way I'm looking at it. Go ahead, Matt.
You got to keep in mind the possibility that they have information that we don't too. So like, what if this is kind of out there thesis, but what if it's all just a play because they want to acquire the COQ token because they know that it's a team that's, very legitimate and working on some cool product that's going to launch. If anyone was going to know these are non-founders of this ridiculous named coin, it probably would be the Avalanche Foundation, and that's always just a possibility. So while that's like out there, and I would definitely not invest in anything based on that thesis, like at the same time, it's definitely possible, and I wouldn't be surprised even if we saw some type of bot or something of that nature launch from some of these meme coin teams in the near future.
Yeah, we got a good discussion on Bonk and the Bonk trading bot coming up later in the show, but that's a definitely good flag. And I think Bonk is kind of a great way of how you can start as a meme coin and kind of transition into this like real protocol and now like Bonk is truly more of a protocol
typical protocol token than a meme coin now, but it still like gets this meme token feel, which is kind of a really interesting way. But again, we'll get into that later in the show. Another news update we have is the Dymension Airdrop. Matt, I'm gonna throw this one over to you to kind of walk us through what Dymension is and a little bit about their airdrop.
So I'm definitely not an expert in Dymension, but I did spend a little bit of time reading about it today. Basically, it's a settlement layer where you can go easily launch a roll app or an application specific roll up. So the idea here is that you'd use a different layer for data availability. So you go use Celestia or Ethereum or wherever you align / get the best costs or whatever as your data availability layer. And you would use Dymension for settlement. Dymension has IBC built into it, so these rollups can communicate with each other in a trust minimized nature, at least compared to other rollups today. So this allows for like easy bridging, the ability to do cross chain swaps more simply and things of that nature. So the IBC aspect of it's pretty cool. Dymension also has like a liquidity layer. So if you're going to go do swaps between these rollups, it actually occurs on the Dymension L1. Other than that, I'm not super well versed in what's going on in Dymension or its intricacies. I do know the token is supposed to have value as like if you create a roll app, you have to bond the token in order to sequence your roll app. I believe that if you want to be in the liquidity layer on L1, you have to pair your token with Dymension, kind of in like a Thorchain rune type model. But like I said, definitely not an expert. They gave the token out to a ton of wallets. I think it was in something like 1 million wallets received this airdrop. So it's definitely one of the biggest airdrops, by number of wallets that received it that I've ever heard about. For reference, Arbitrum was about 600,000 wallets. So a very large number of wallets received it. Likely it won't be a huge airdrop, but they gave it to tons of different networks. So if you are a rollup user, use Ethereum rollups. If you've used Wormhole to bridge, if you hold a Mad Lad on Solana, if you're staking Celestia, just to name a few of the users who they gave these tokens to. One interesting thing about this type of airdrop is you could potentially see how it would lead to bringing a ton of different communities that are mostly, isolated and not a ton of layover between, for instance, like the people up transacting on Solana every day and the ones doing it on Arbitrum. So being able to, if they are able to get both of those communities and user bases interested in Dymension, claiming their tokens and messing around over with the roll apps built on top of it, there is a chance that it could see a lot of interest from a lot of different markets within the greater crypto market. I think it's a cool and interesting project, but that said, I'm not speculating that, the airdrops are going to be worth a ton of money. Wouldn't be surprised if it ended up even being in like the $50 to $100 range. I could see it being a bit more for sure. Depending what you were doing, I think you got between 500 and 1,500 DYM tokens, like depending on which activities you qualified for. But yeah, like that's kind of how I saw the Dymension play out. I'm excited to read more about it and get a better understanding of it soon.
I find the distribution very interesting, and you highlighted this, that they're really trying to pull a bunch of communities together. We've seen this trend kind of continue. Most recently, I think of Pith that also did this, right? They had this large audience of different protocols, users of different protocols that were Pith enabled. So like example is perp dexes across various chains that were all using Pith, or those users actually got this airdrop. And so what that did was pull a lot of Ethereum users, just because that's where most perp dexes lived, is Ethereum or Ethereum L2s. And it pulled that community over to Solana and gave them, a couple $1,000 to go play around on Solana, which is this interesting method. And of course, that was like less about attracting users to Pith and more so ended up being like better for Solana. But this is definitely a trend that I've seen and I think will continue. With Dymension, I think it makes a bunch of sense as well. If you need to kind of bootstrap this ecosystem of not only builders but users that kind of need to act as a settlement layer, like you need value on your chain for that to be useful. So it's definitely interesting to see this. I know we talk about this a bunch, but the TIA stakers getting it. This is kind of the theory is this is the first of many. So maybe we'll see a continued trend for that department.
My kind of only takeaway from this was that, like, if I've understood correctly, the amounts per wallets people have gotten are quite small. But then again, it was also super easy to qualify to get an airdrop. So I've seen some takes on Twitter, for example, of people like saying that it would have been pretty easy to like Cybele this airdrop, because all you kind of had to do is just this one specific task, of which there were many, and the tasks weren't that like hard to accomplish. So there might be a lot of like airdrops going to these budders.
I think takeaway there though is if you put yourself in the shoes of the protocol, like why would you make that decision? Cybele detection's like super challenging to do, right? But there are a lot of examples of how to like cast at least a wide enough net to mitigate some of it. But if you're still going that route of, so assume that like they knew they'd get some bots doing this, or I should say they'd reward some bots with this methodology, and they still pursued it. The question becomes why? Like why is that a good idea? And if you want to give a little value to a lot of people, to me, that tells me that you don't necessarily need rich users, but you need users, right? You, even giving $50 to somebody, that will still bring them to your chain. And again, based on their goal to be this settlement layer, this form of value, you want a bunch of people with a bunch of money. So then roll apps are more incentivized to launch there because you have all of these rich users, or not necessarily rich, but you have all of these users, right? You have this interaction going on chain. I think that's like why ETH is such this exciting settlement layer. Why you see things like Eclipse that's going to use Celestia DA, which is much cheaper and much better to create a scalable chain, but still use your settlement and put your bridge contract on Ethereum. It's because they have this huge user base and this huge liquidity source, right? So I kind of get why that makes sense for Dymension.
Yeah, I get your point, but I gotta push a bit back on that because, like, right, if you have some huge botting networks that are going to like accrue most of the, or maybe not most of the value, but like huge amounts of value from these airdrops. Meanwhile, most of the basic people or like regular users are just getting a small pie of it. It's gonna be like kind of or create an unfair structure to the airdrop, and then that might backfire for you in the future if like things come out that the like tokens were airdropped most to the like budders or whatever.
It does decentralize the network pretty well. So we actually saw somewhat similar with Arbitrum as far as not, doing a super intensive Sybil protection in their airdrop. They actually rewarded quite a few airdroppers with quite a bit of Sybil farmers with quite a bit of ARB. And one thing that it did achieve for Arbitrum DAO was like pretty solid decentralization in the network as far as having a lot of community participants with delegations or receive. And at the end of the day, it ends up with a lot of tokens being distributed to a lot of wallets. You doubt the bot farmers are going to go keep their tokens. So at the end of the day, you have a lot of wallets holding this token likely in the near future. So that does aid in decentralization. And building off Dan's point about working with Celestia, like I think that's something we should probably hit on, which is Celestia is this huge narrative, really cool data availability layer, but it doesn't enable settlement, which Dymension does. So even though like I'd never really done too much research in Dymension, I just heard it in passing. I do think that particularly interests me, how it pairs with Celestia, how you use Dymension for settlement and you use Celestia for data availability, and that pairing kind of works pretty well. And I could see it even maybe like continuing a narrative in the future, though that's not my base case. Like I definitely wouldn't be surprised if that happened.
All right, 0x Research listeners, we're calling on you to join us for the premier institutional crypto conference in Europe's crypto capital, London, this March 2024. You're going to get to hear exclusive insights from industry trailblazers on things like leveraging DeFi protocols for institutional yield, tokenizing real-world assets with instant settlement, navigating the evolving global regulatory landscape, integrating digital assets into banking and payments, or crafting institutional investment mandates with digital assets as the key focus. We'll also be featuring some big keynote speakers, including Melvin Dang, the CEO at QCP Capital, Mark Yusko, the CEO and managing partner of Morgan Creek Capital, and Stani Kluchin, the founder and CEO of Aave Companies. This is not an event you're going to want to miss. Seats are limited, so be sure to register today by hitting the link in the description and using promo code 0x20 to save 20% on your tickets. See you in London, the land of tasty pastries, and be sure to hit up Dan and I for a beer.
Speaking of Celestia, though, I guess this is kind of digressing away from Dymension, but everybody keeps talking about Celestia underneath. How many tweets have you seen that's, oh, this is using Celestia, I'm using Celestia for my new rollup? Celestia underneath has become this like mini Twitter narrative. Well, I'm running the data on Celestia right now. There are three, I'll pull this up later in the show, but there are three namespaces using Celestia. So namespaces are basically like if I was a rollup and posting my data to Celestia, I would have my own namespace that was like Daniel's rollup, and this is where I put all my data, so I can easily go find my rollups data. And nobody's using it yet, so I don't know why this is. I don't think this is a red flag by any means. I just find it interesting that we keep seeing I'm using Celestia, and yet nobody's actually using Celestia. They're all using Celestia testnet because they're still working on getting this implementation live. I don't know if there are hiccups to getting these things live. My gut tells me no, that's not the case, and it's just like spinning up a new chain is not like a overnight task really, and so we just haven't seen those come live yet. So if I don't see anything in Q1, I'm probably going to be in that mode of starting to get nervous. Of course, Brick's laughing at me because he's probably thinking it just doesn't matter. It's going to be the narrative trade anyways. But it is interesting to see that there are literally only 3 namespaces being used. And I don't know what they are. So you can name your namespace anything, like Daniel's Rollup or just a hex string of numbers and letters. And of course, the 3 that are being used are just 3 strings of numbers like 080808, or one of them I think is 2410, and then the third one is like just a random string of numbers. So no idea what these are, and my guess is it would be somebody testing something, but it's just too hard to say.
Kind of a question for you. Do you happen to know what the namespace was that pumped the blob data posted on Celestia on, was it December 17th? It was called something like Astro. Sorry if I'm throwing a hard question at you right now, but I was just wondering if you...
Yeah, so that was Astroglyph, which is correct. It was I'm trying to share screen here, but Astroglyph is none other than an inscriptions protocol. So really, no surprise why that was driving the numbers here. But all right, so I got this up, cooked up a quick dashboard just to show Blockworks Research subscribers what exactly is going on Celestia. So we like to use these spotlight dashboards to capture recent trends or market moving narratives. And so right now, this is what we're looking at. So if we use, we refresh this at the end of every day, so we get the full picture of the latest data once a completed day has happened. And you'll see these are the 3 namespaces I was talking about. So just like a random string of numbers. So it's a little hard to kind of say what exactly these things are. But if you see at the top of this leaderboard, we have, Astroglyph posted a shit ton of data on December 21st, about 278 megabytes, which is far more than we've seen basically in total by anybody. So inscriptions is the long answer there. And then, I mean, here you can see that a couple days we've had more than 3 namespaces, but for the most part, you're getting between 3 and 6 namespaces per day. And on the namespaces front, 0x Osprey on Twitter, I was chatting with him, and he had a really, really interesting take on namespaces. So the best way to describe these, I think, is like Celestia's blob space as like all of Reddit. And within Reddit, you can interact with different users by going to a subreddit. So like reddit.com/Daniel's Reddit, right? Like then you can get to just my page, and I can post data to just my page. Brick, you can post data to just my page, or I can like make a private page where only I can post data to. And that's a great way to think about namespaces is subreddits. So for example, here, if I go on this leaderboard, there's a namespace called memes, and only 1 blob has been posted to it, and it's like this animation of the Rick Roll song. So you could see a protocol being built on Celestia namespaces that is like based around this subreddit idea where you can like all of the data gets posted to Celestia. Of course, it's more of a data availability source than a storage source, but like this website could definitely run an archival node in this case. So it's really interesting to think about exactly just like this idea of like Celestia namespaces being subreddits. I don't know. You can see a cool protocol being built on top of it for sure.
I think one thing that just came to my mind about Dymension is that obviously there's like a lot of roll-up as a service providers that have spun up in the past year. I think the most popular ones are probably Conduit, Outlayer, and now Dymension. One thing I've always thought about is what is the competitive advantage or the sustainable competitive advantage of these roll-up as a service, and how do they establish like a moat over time? Because everyone can like put OP stack in a check mark, everyone can put like Celestia DA, everyone can support like Arbitrum Orbit, and every roll-up as a service provider is going to provide that. And it's hard to see the value accrue for them. Whereas Dymension has come in here with like a slightly alternative model, right? They have like the Dymension Hub, their own DA network, and sort of their own settlement layer. And perhaps that's how they're thinking about value accrual for roll-up as a service. Whereas for someone like Conduit, right? If you're just helping people launch OP stack roll-ups, it's hard to see the value accrue for them, right? Because if there's some like fancy like shared sequencer, some like shared infra, like chances are you can't share that much info. You need like a RPC for each individual role app, and sure, you may make some margins there. But a shared sequencer, like that's not gonna be a U thing. That's gonna be like an espresso OP super chain thing, right? And so perhaps there's something here to be said for Dymension and the Dymension Hub, where they're gonna build their own AMM on the L1.
Yeah, and then like I don't know, I don't want to get too deep into the weeds on this one, but like the idea of sovereign rollups comes to my mind here, where you kind of don't need the settlement layer. So I think there's just so much iteration left in experimentation left in this roll app space. We really haven't seen this world of a million chains and how that's going to play out. So still a lot to come is kind of where my head's at with this one. But if we move on to another news segment this week, Maker is back in the talk of the town. Really, it's producing real revenues, and people are starting to wake up to it. So, Brick, can you walk us through the latest and greatest with MakerDAO?
Yeah, for sure. I mean, I've been looking at the assets since probably beginning of September or something like that, and I've been feeling like, I don't know, yelling into an empty void or whatever, because like the market just doesn't seem to like catch on to this narrative. But now suddenly like a few big names within the Maker community posted kind of few small threads about the protocol, and suddenly like the market just jumps on it. And I think today the token is up around 15% or something like that. And kind of the main points that people are now starting to realize is that like Maker is a real revenue generating machine, so to say. So in the bear market, they've done, or the protocol has done pretty well because of their large RWA holdings, or more specifically, their T-bill holdings. And now when interest rates kind of are starting to revert, but then crypto is coming back, so more and more people are starting to take out DAI loans, or like basically giving collateral back into Maker and then minting DAI out, which of course accrues a revenue to, or a fee to, a Maker. So then that part starts to grow, while T-bills kind of might, or T-bill revenue might start decreasing. So in an ideal scenario where the bull market and the interest rates are moving like in negative directions or in different directions, the protocol can create pretty like stable and large revenues. And then on top of that, end game is, of course, so end game is basically Maker's like 5-phased plan to change the protocol to its final phase, which is expected to happen over like, I don't know, 5 years. And it has been kind of delayed because of, I guess, a lot of stuff, but mainly I think some governance frictions and some devs leaving and things like that. Anyway, so now people are also realizing that as part of Endgame, or the newest changes into Endgame, the Maker like native token you will be able to swap it at a rate of 1 to 24k if the newest proposal passes, which means that the token price pretty much just goes down, or like the FDV stays the same and the market cap stays the same, but the price of the token just goes down. And then now a narrative is starting to form that, okay, new and cheap token, cheap in quotation marks, because like the price doesn't really matter here, will like get a lot of more attention. And then also another narrative that I've kind of been seeing today on Twitter is that like being middle curve is the new narrative, or that's the new meme. Like you don't want to go left curve, you don't want to go right curve, you want to be cool and do these middle curve RWA investments. And actually, yeah, the protocol plays pretty nicely into that narrative. And I guess a lot of research houses and funds have predicted that this year will be the year of or a large narrative this year will be RWAs. So plays into that as well. And then, of course, as part of Endgame, Maker will create these sub DAOs. And one of those being Spark DAO, which is basically the DAO for the lending platform Spark protocol, which is now kind of under Maker. And Spark has been doing Spark Protocol has been doing super well recently. So the amount borrowed has increased from like around 200 million at the beginning of October to now being a bit over 5 billion. So a 5x increase in a pretty short amount of time. And if you look at governance proposals or what people are talking about in the forums, it's quite clear that Maker is trying to push more and more Spark into the spotlight and get more users through that. Although should be noted that the protocol doesn't really accrue that much revenue through the platform right now, but maybe that will change in the future. And it's been super cool to see that like someone else, or kind of, although Maker is an OG project, but still like a new protocol is able to take market share away from Aave on Ethereum. And then the last point being that Maker this year or last year initiated again, or like reinitiated its value accrual mechanism for the native token, where instead of now burning Maker with fees or like profits, the protocol instead acquires Maker and then pairs that with DAI into a Uniswap pool. So increasing protocol owned liquidity, and with that should make trading easier, or on-chain trading of the native token easier. And yeah, those are basically the large narratives that people have finally started catching on, and we'll see how long this kind of first wave lasts and how much people or how much interest the token can accumulate now. But yeah, any thoughts from you guys?
It's absolutely hilarious that you bring up all these like fundamental, innovations and value propositions. For instance, the inverse correlation between the T-bill rates and the potential supply of DAI, and the growth of Spark protocol, the growth of the protocol and liquidity, or POL. And the only thing that hits me is unit bias. They're going to trade one Maker, which is currently trading at 4 figures, into 20, traded to 20, divided by 24,000, and all of a sudden it's going to be quote unquote cheap. Obviously, to anyone out there, like, it doesn't actually change the FDV or the value of this protocol, and it should have no implication. But as we know, unit bias is a real thing in crypto, and that makes me hella bullish MKR. So that's really funny.
I really didn't think that unit bias was real. Like, it's just so stupid that I was like, all right, I had too much faith in the average person. And then one of my sort of distant friends, not a close friend by any means, just random text out of the day, out of nowhere, he just texts me like, hey, like, what do you think about this Caspa protocol? It's like, okay, here we go again. Another one of these like YouTube scam coins. So I like talk him off the ledge, and he's like, I don't know, man. It just looks so cheap. It was like a couple cents, or I don't even remember what I was trading at, but it was like, he was like, relative to, I think he was talking about Solana was his other choice, because he was between. And he mentioned it was cheap because of the price, and the price was like a fraction of a cent. And I was like, wow, like the average people really do think like this. That I don't get it. It's hard for me to wrap my mind around, but that shit is real. So unfortunately that matters, which is a super interesting takeaway. But Brick, you mentioned another thing I thought that was interesting about like being in the middle curve might be a good thing. And I kind of tend to agree with you. I think during a bear market, you want to lean middle left in a lot of ways, because, or sorry, in a bull market. But in a bear market, like that's when you want to take your big like right curve contrarian bet that's like, this token's deeply on sale and it will be the one to outperform. But as the market starts to come back alive and attention starts to refocus around narratives and bounce from one narrative to the other, like that's when you kind of want to be just barely front running the masses, and then just like copy trading the masses, because that's where the capital is flowing. So I kind of see that thesis making a lot of sense about staying in the middle curve kind of during one of the more hot market periods.
Yeah, definitely. And maybe another takeaway from this all is that like how large the impact of crypto Twitter still is. Like people started posting about this maybe 3 hours ago, and then maybe an hour and a half ago the token starts pumping. Like everyone's so quick to hop on this narrative, and it's usually like some combination of a few accounts that get kind of noticed by the masses, and then people start buying into these tokens, and suddenly you have like a large narrative going on. So I guess it's just not about like finding the right drivers and being like super diligent with what you're buying into and kind of being in the or at the middle of the curve, but also being able to predict what's gonna become popular or what other people will start looking at.
I think Maker also benefits from sort of like being one of the only large cap RWA protocols, or in terms of like the token and their traction. Like if you think about all of the other RWA protocols, either not a lot of them have a token, have value accrual, or the protocol is at like a super small, like sub 100 or 50 million TVL. And so if you're thinking of RWAs, right, you're thinking like, okay, MakerDAO is probably the one I want to buy. You're probably not going to go out there and buy a Centrifuge, Goldfinch. You're probably not going to go buy on-chain like treasury issuer if they even have tokens. And so MakerDAO is really like the only token that comes to mind for a lot of people. This is in comparison to something like AI and decentralized compute, right? If you're like thinking of like longing decentralized compute today, you're like, okay, you look at Akash, you look at like Render, you get like IONET, which is having a token come out in Q1, and you're like, all of these stats look kind of similar. They all have like maybe like a few thousand or like 10,000 GPUs. I'm not really sure what to know, but for RWAs, it's really just Maker's like the only large one or like significant player that comes to mind.
Yeah, that's a good take, and also Spark Protocol has just absolutely crushed. And Brick, you hit on this. I just want to double down on that because I think they launched, let's call it 6 months ago, and they already have over 850 million in borrows outstanding, and it's really really huge to see that. And you kind of pointed out that it has kind of been this quick riser up the lending leading board, already in the third or fourth position behind like Aave and Compound, the two giants that have been around a full DeFi cycle. Whereas again, this protocol is 6 months old and has already been able to just absolutely crush it. I think a lot of that, I don't know the numbers, but I'm curious like what still resides in some of those more OG like Oasis vaults, because my assumption is a lot of that just migrated like from Oasis into Spark. But nonetheless, I think that really highlights the success that they're having, highlights how Maker has kind of diversified itself into being bull and bear market resistant. And what I mean by that is, in a bear market, RWAs crush. That's T-bills. In a bear market, that's where you want to go. Flight to safety. And for Maker, that means revenue throughout a bear. And then they've got a great lending protocol built around the Aave V3 tech and forked from that, and being iterated on by Sam McPherson and the team to still create these crypto-backed loans that people want in the heat of a bull market. So they kind of have both ends of the spectrum, and yeah, super. I mean, it's just really a complete DeFi protocol that is starting to look more and more like a real company that has a good future ahead of it. It's interesting to see that from a DeFi protocol, not something we're totally used to.
I loved Ren's point too about like DAI and Maker versus, or Spark Protocol DAI and Maker versus, on-chain real world asset protocols, because it's something that I haven't understood so much. There's a lot of people calling for these on-chain RWA protocols to have like the narrative of the year in 2024 as institutional investors want to hold treasuries on chain. And I just don't really see it. I see a lot of appetite for stablecoin creation. I see a lot of appetite for Maker and DAI, but I don't see institutions paying a 25 basis point fee to hold their real world assets on chain versus in a brokerage firm. So like that narrative, hasn't clicked for me. I could be wrong, but for me, it's just like, if I wanted real world asset exposure, I'd be getting it here as well. And touching like a little further on this point you were brought up earlier, Dan, which is like in a bull market, you kind of want to maybe you want to tend away from the right mid curve a little bit and a little bit further towards left. It's something that I call like IQ off, risk on. It's like, this is ridiculous. And I hate that I'm even saying this, but it's something I've learned over being in crypto for a very long time, which is, even though you can say in a very intellectual, sophisticated, and completely true manner that things like the number of daily active users on a high throughput, low cost blockchain, the total volume on an asset that you can trade with zero fees, the order book depth in an industry which has no regulatory jurisdiction that says you can't be, spoofing the order book, like these things. Or how about GitHub commits, like things like GitHub commits, where you say there's tons of different developers committing to GitHub when, it could just be like a bot farm that's spinning up new GitHubs and making a commit that changes the space in the documentation or something. It's like, for the longest time, I just thought these things were completely irrelevant and baseless and shouldn't have any effect on value, and like they shouldn't, but they do. And it's like, at the end of the day, sometimes it makes sense to if for a trade, not for an investment, but sometimes it makes sense to like turn off the IQ a little bit and just go with the flow and focus on that left curve mindset.
So you're telling me I should long scroll because they have 1.1 million developers on their blockchain? Thank you.
They have more developers than users in this industry. It's quite impressive.
That chart on Blockworks Research is crazy. It shows the number of unique addresses that have deployed a contract on each L2, and scroll is just like, I don't know the exact number, like 10 times or 20 times higher than every other L2. And one could predict that it's likely people that think they'll get an airdrop for that. It's ZK Sync. It's not even scroll. Sorry about that. It's ZK Sync, but it's hilarious. At the end of the day, it's
same shit.
Funny industry.
It's kind of sad that your previous statement is true, though, Matt. Like you have to turn off your brain to follow the trends, which is very telling about who's pushing the trends. But nonetheless, you mentioned some bullshit metrics. I think that's a good segue into our hot seat, cool throne. So I'm actually putting active addresses in the hot seat this week because Brick asked me a question earlier today, and he said, why does Polygon have about 80,000 new active addresses a day? And new active addresses, as defined by the first time an address is using the blockchain, is occurring within this period. So he's looking at a daily time frame. So there's about 80,000 addresses that were had in their first transaction ever was again in this specific day. And so just as a recap, about 80,000 new addresses per day on Polygon right now. And so I was like, okay, given that there's not a lot of activity on Polygon, that's a bit surprising. And so first reaction, I was like, all right, let me go double check the code. Like bugs are possible. So went through and did that. Of course, it looks good. And so I started poking through some of the addresses that had their first transaction in today. Of course, literally the first one I pull is I flip through the transactions, and it's literally 2,000 Matic tokens being sent from one address to a new 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 address to like it's just this chain of just spamming new addresses. So I don't know who spun this up. I don't know what its intention is, but at the end of the day, it is pushing new addresses into the active address count. And so again, going back to 0x Osprey, he's the theme of this episode, it appears. He's very vocal on Twitter about active addresses being a bullshit metric, and he was kind of the first person to put me onto this, and I very much so moved to this corner. And I think Mert's pretty loud about this on Solana too, which is good to see because cheaper blockchains are easier to spoof the active addresses. If you wanted to send one transfer from about 480,000 active addresses, which is the total addresses, so active or new and existing addresses on Polygon today is about 480,000. That would cost $650 just to send one transfer from 480,000 wallets, right? And you obviously space them out through the day, avoid stake contention, yada yada. That's pretty telling that what can be spoofed in this industry will be. And so you can't just look at transaction count that got shot up like completely ruined a lot of charts, to be quite honest, for Arbitrum, Avalanche, even Solana. They all got hit pretty hard by inscriptions. And so you can't just be like, oh, look how great my blockchain is today because I have this huge spike in transaction count. Or, oh, wow, look at this. We have 80,000 new active addresses today. It's like we have 80,000 new users coming online. Like a lot of the time I see people talk about active addresses and then use the word user. And to me, when you say user, you're reflecting like a human behind the address. And that's I really like to stay away from saying active addresses equal users. Because if you think about a Web 2 comparison, a social media site probably doesn't say that their active addresses or their total users are their number of email addresses. And that's kind of more akin to a crypto address. You really want to try to somehow do something. If you say user to me when you're talking about addresses, that means you've done some sort of manipulation to that number to remove bots. And I don't think that ever really happens. So I think Michael Silbert from the Optimism team has done some cool work on trying to pull out bot addresses. But I don't know. I think that's something we need to work towards as an industry is staying away from highlighting one metric that's easily manipulatable and saying, oh, wow, look at this. We have the best blockchain in the world because of this one stat on this one day. Like we need to see trends through time of a series of metrics that are preferably hard to manipulate. So I'm putting shitty metrics in the hot seat this week.
Yeah, I gotta say, there's a lot of them, especially in an unregulated industry. It's like you don't even. I wouldn't even assume that it's the team. Like I wouldn't go assume that
No,
whatever
yeah. Good call. I'm not accusing anybody here. That it's just like this shit happens. Like this could be some dedicated super fan who's like, Polygon is my fucking bag, and I'm gonna make it look like people use this chain. Like it could be literally anybody. There could be some weird purpose to this too that I don't know. I don't want to insinuate anything here. Again, I looked at this for 10 minutes with Brick earlier, but it's just proof that the stat itself is manipulatable.
It's tough, man. It's tough to find non-manipulatable metrics, like even around price data, like volume and depth, like I mentioned earlier. It's easily spoofed. Even market makers in crypto, and this is something that's like not really talked about, and maybe should continue to not really be talked about. But it's like you can buy an asset when it's one. You buy an asset when the price impact is one standard deviation below average, and you sell it when it's one higher. And the team funds you with a bunch of tokens and dollars to start off this market, quote unquote, market making endeavor. It's like I don't know. Our industry has a lot of interesting things of that nature where you just definitely got to be careful and aware. And if not, you should probably stay out of investing in things outside of the top two crypto tokens.
Yeah, you bring up DEX trading. It's a great one. Two things come to mind. One is Canto. If you remember the peak of the Canto craze, they have zero fee DEX swaps because the DEX was like core to the protocol itself, if I remember correctly. And so because of this, like the total DEX volume on Canto is like flipping major chains, and they're obviously it's getting touted on Twitter for being the second coming of Jesus chain. And the reality was like it was just free swaps. So you saw a shit ton of wash trading. The second one that comes to mind is I believe it was Dodo. But Dodo had like a single pool that was either like zero swap fee or 0.01% or some very, very small fee. And so this one pool was doing insane volume. And then the rest of their protocol was like relatively quiet. But because this one pool was doing so much volume and it was likely mostly wash volume, the Dodo is like always in the top tier, the top, say, 5 or 10 dexes when you're like filtering on, say, DeFi Llama or some other tool. And so it's like, what can be manipulated will be, and you really need to factor that into your decision-making process when you're judging the quality of an asset or a protocol. Maybe that's a good jumping point for another hot seat or cool throne. Ren, I'll toss things over to you.
Yeah, I got two cool thrones this week, actually. The first is BonkBot. So obviously, as a starting point, I do think Telegram trading bots do really well this cycle. I mean, like everything, all of the degeneracy you saw last cycle, and you just make that UI UX like 10 times easier. That's basically what Telegram trading bots are. And I think the game has gotten a lot more sophisticated, especially in terms of the speed advantage you need to have. And Telegram trading bots are like the perfect solution to that. Sure, there are definitely some like security concerns around them having a private keys, and we've seen some exploits. But I want to talk about BonkBot for a second. So BonkBot is a Telegram trading bot on Solana with the Bonk brand, but if I'm not wrong, it has a separate development team. They have a lifetime volume of 770 million and nearly 100k cumulative users. It's done some really, really impressive numbers, probably partially on the back of Bonkmas, which was this 12-day sort of like airdrop thing that Bonk was running, where you basically got to try out a lot of different integrations that use Bonk or Bonk's own products. They had an average volume per user of 8,200, and they've generated 9 million in lifetime fees. I really shouldn't be doing this, but their highest daily fee was 678,000. And if you annualize that, that's 280 million. I know some people are going to come after me for that. I know we're not
Have
going to
some
see that every day.
decency.
But I don't know. I always have like a fun time extrapolating and analyzing things. I did the same thing for like Gito's validator tips. If you annualize like the highest day of like validator tips on Gito is like some crazy number, and it could potentially support like whatever valuation Gito is at right now. But 280 million. I think whatever like activity you saw right now, right, in terms of like 768,000 in one day, it's very possible to see that level of activity every day in a bull market if you knew how things crazy were last cycle, right? So that's kind of why I don't think it's the worst thing to analyze these numbers sometimes. Sure, they won't last forever, but they'll last for a certain period of time, and perhaps will be even higher. But it's a 1% fee on all of the trades. 100% of the fees are used to buy back. There's like it goes to different places. 10% of it is burned. 10% of it goes to the DAO. 30% of it goes to like this development teams. But yeah, it's a seriously impressive amount of volume, right? If you told me that BonkBot has surpassed Unibot in lifetime value, I would not have guessed that, to be honest. But it has. Unibot's around 500 million, BonkBot's at 700 million, and number 2 Banana Guns at 900 million. So, give it a few more weeks and it will probably become number 2 in cumulative transaction volume. And I think there's a few things to take note of here. The first is obviously Solana user activity is on a tear. Degen activity on the chain has picked up very, very significantly. The second thing is, I think these Telegram trading bot wars are gonna heat up significantly. Like, it's been relatively okay so far, and the competition has been mostly limited to like individual chains. But Unibot, for example, just announced that they're gonna move to Solana 1 week ago, and they've just launched their Solana bot. And Unibot has also launched a trading terminal, I want to say a few months ago, called Unibot X, which I just checked it out, looks relatively professional. And I think cumulatively, these protocols are probably going to make a ridiculous amount of money next cycle. I wouldn't be surprised if they make like 1 billion in total.
Yeah, the stats on BonkBot are honestly pretty crazy. You shouted out a lot of great ones, but you also mentioned Bonkmas. I think this started around the December 15th or 16th, and you really see this kind of being a key point in the rise and recent adoption of BonkBot. But there seem to be leveling off somewhere in the neighborhood of about 25,000 users per day, which is a pretty meaningful number. And yes, this was an incentive program, so you don't want to just like stare directly at these incentivized values and use these for your future assumptions. But if let's say that this 25,000 daily active user number is where BonkBot levels off around, I would call that a damn successful incentivization program. You run a 10, 15, I think it was 10 day incentive program, and all of a sudden you have 20,000 active users. That's a success. And looking at the stats, it's crazy. I mean, they were doing some pretty meaningful fee revenue, right? They were averaging somewhere between like 500 and 200 and 700,000 in fee revenue per day, which of course 10% of that is burned and returned to bondholders. It's pretty interesting because this thing obviously got advertised as a meme coin, but again, it's really looking more and more like a traditional protocol token, and there's a team behind the token developing it and pushing it forward. And if you look at its performance relative to other bots, I think there's a really interesting takeaway where, yes, Bonkmas ended and usage dropped off a bit. But that also Bonkmas kind of like perfectly overlapped this peak moment of shitcoining on Solana. And the two are probably related, right? If more people are using a Telegram trading bot, then there's more incentive to go shitcoin on Solana. But if you look at the stats, it's like insane market dominance just straight out of the gates. So this huge pink piece here for the viewers rather than the listeners is the number of users per Telegram bot. And if you look at their user dominance, they came online in mid-November at about 5%, and currently they've got about 68% of the total trading bot user dominance, which is absolutely madness. And if you go strictly on volume, it's not like their users are all trading, $1. They're still in about 60 to 70% of total volume dominance for Telegram trading bots as well. So these are great dashboards by Whale Hunter. Definitely go check these out on Dune. I think that the trading bot volume dominance is going to be my indicator for frothy points in crypto. I think we have this weird thing in this industry where we try to find, or we call everything a top signal. And what top signals you've seen in the past, you tend to hold on to and carry forward with you. So things like, institutions buying crypto or famous people talking about crypto, like, oh, top signal. And there's a million different examples of this. So I'm curious if you guys have any good ones. But for me, I think you need to adapt these to the current market conditions. And Telegram trading bots didn't exist until a few months ago. So for me, this is definitely a top signal, or a local top signal, is when when volume jumps from 40 million to 80 million, things might be getting frothy and it might be time to cool off. I'm really intrigued to see how this new metric kind of plays out over the next couple of months.
I think if I had to choose like a top signal related to Telegram trading bots, it would probably be like volume comparisons between like centralized exchanges and Telegram trading bots. Like if we ever reach a point where Telegram trading bots was 50% of like sex spot trading volume, that's probably a sign of like you should probably sell. If it gets to like 100%, then 100% like just sell everything at that point. Right? If it ever overtakes, oh my god, yeah. Hopefully everyone's rich by that point. I do kind of agree with like the top signal point, especially. I think last cycle was slightly different in that it was like the first cycle that retail got exposed to the masses. I'm sure we see like a lot of the same things play out, but also this cycle, there's like the whole like quote unquote institutional thing with the Bitcoin ETF. And I think there's just like too many top signals to keep track of. I don't think it's very prudent to like try to like have a checklist of like 10 top signals and then like if like 7 of them like ever hit, like then sell everything. That's too complicated for me.
My top signal is when a Blockworks Research analyst sends a Zillow for more than 5 million and I'm selling everything. I'm also very fortunate to have the best bottom signal of all time when we're about to start a bull run, which is my parents telling me that I should switch careers. And at that point, I just, net worth into crypto. It's time to go heavy. You go to a family dinner and people are like, so you're buying you're buying the beers, right? And yeah, then you sell.
Another thing that comes to mind from this conversation is just that, or I get the feeling that, or you can say that we're still so early, because the best value accrual models or the best kind of business models right now in crypto are super like kind of degen related and trading related. Like there's still not a lot of, I don't know how to put it, things to do for kind of retail users, or maybe your mom and dad won't come on chain because like they're able to use trading bot. But once there's like a real use case, then maybe these business models flip as well, and like there's another vertical in which like investors start looking at for value.
It's like one good question, I guess, is, and man, I feel so bad. I probably sound like the biggest pessimist crypto hater. Like, I love our industry. I think, I think I think it's truly technology that changes the world, but are fundamentals good at this point in time for crypto? Like, if Bonk loses its meme ability slash its sole no value, this is just some 69 420 crap, blah 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 blah. Like, let's go make fun of it on the internet. And attempts to create fundamental value through buying and burning Bonk from fees that the trading bot sees, you could make a case that that's actually bearish for the token versus the no fundamental value accrual. And that's sad to say, but I definitely think that I could at least argue it whether or not I believe it.
Hey, Doge operates a whole ass chain. That's the one thing to keep in your back pocket. But unfortunately, I do agree with the direction you're heading. Ren, I know you said you had another hot seat cool throne, so fire away.
Yeah, obviously we have a big day potentially coming in, I want to say 8 days. I know the approval window that got put out there last month was like January 5th to January 10th. And if you haven't figured out at this point, I'm talking about the spot Bitcoin ETF. Um, we've seen a huge amount of activity in the past few weeks from all of the issuers, and it seems like everyone's getting a race or getting the race on, so to say. You're starting to see some like 30-second ads come out. For example, Bitwise put out an ad, and I wouldn't be too surprised to see that basically 10x right in the next few months. Just to run some numbers here, gold ETFs have around 120 billion in AUM with an expense ratio of, for example, 60 bips. That's almost 700 million in fees per year. If you annualize that out, extrapolate, do a DCF, whatever, that's probably a shitload of money over the next 10 to 20 years, especially if Bitcoin 3x's, 5x's, whatever it does, right? And I think one thing about ETFs is like if you choose like a S&P index fund, right, chances are you don't change who you buy. You buy them for either A, they have like the lowest expense ratio, or B, like they track the underlying the best. And so over time, that customer value increases. I don't want to say exponentially, but it definitely increases, right? Either as the price of Bitcoin goes up, or you become richer and you keep on putting like 5% of your paycheck into Bitcoin, right? Hopefully you make more money over your career every year. If not, you'd probably be doing something wrong. But basically, there's a lot of money at stake for a lot of these people. So these issuers are probably going to really ramp up the marketing and ad spend over the coming months, because every, I don't know, $1 million you spend today could be 100 million in fee revenue over the coming decades, right? And so fees have been a big point of all of these spot Bitcoin ETFs. I think the lowest one has come in at 0.39% or 39 bips by Wise Origin. And there's been a few sort of like promotional tactics, so to say. For example, Galaxies, their fee is normally 59 bips, but for the first 6 months and the first 5 billion in assets, they are going feeless, so zero fees, which I think is like pretty damn rare for any ETF. Like even Vanguard's like VOO, their S&P like index fund slash ETF is 3 bips expense ratio. And another thing that people should be watching for is how much these issuers are seeding their ETFs with. I think Bitwise has come in at 200 million, which is by far the highest out of all of the spot ETF issuers. The next highest one, I think, is, I want to say 10 million, looking at this table from James Seyfarth, our ETF god. And that's from iShares. But basically, TLDR, it's hard to say who's going to win today. Whoever wins, there's probably some quote unquote like network effects, and they'll probably stand to make a lot of money over the next 10, 20, 30 years.
I'm just going to go ahead and give my quote there because it's very similar and on the same subject, which is Jane Street, who is the announced AP authorized participant on 3 of the ETFs already, likely to be added on a few of the ones that currently have NAs listed as their APs. For those that don't know, the authorized participant is the one who has the ability to create and redeem shares, meaning that if the price of Bitcoin trades above the price of the ETF, they have the ability to actually, buy the ETF, redeem the Bitcoin, go sell the Bitcoin. And if the price of Bitcoin trades below the price of the ETF, they can go, buy Bitcoin and create shares. So create, redeem. And Jane Street will likely be printing money when these ETFs launch. I'm imagining that the ETFs that they are the AP on will likely have lower spreads than the other ones, though obviously there's no guarantee of that. And because of that, at the end of the day, I think those ETFs will actually have a leg up as well. So just another factor in which which ETFs might gain a lot of TVL, and it's probably going to be ones with low spreads as well.
Well done. Yeah, it's definitely interesting. For me, I think the huge talk of the town has been, is this going to be a sell the news event? And I think crypto natives are heavily favoring yes, which I think is fucking hilarious. I mean, so for me, this all comes down to what the chart looks like ends up coming down to the time frame between approval and launch. So my understanding is the SEC will come out and say, assuming this is approved, we could get a right hook from Gary Gensler and friends here and just deny it. But let's assume it's approved. My understanding is the announcement will look something along the lines of, X, Y, and Z ETFs have been approved for trading on, this day. And that day will be likely, the Bloomberg fellows are honestly where I get 99.99% of my ETF updates from, and I think that's a great source, and would recommend you do the same. But they were saying it'll likely be measured in days, not weeks. So for example, it'll be trading just a few days after the announcement, as opposed to weeks after the announcement. And so because of that, I think that it'd be hilarious to see crypto natives sell off, because as we've been mentioning all episode, all anyone's doing right now is chasing from narrative A to narrative B and so down the line. And once the Bitcoin ETF launches, every crypto native is going to assume the ETF or the ETH ETF is next in line. And so I wouldn't be so shocked to see them all rotate to ETH. And then the inflows start. And if the inflows are what we would hope to see, you're getting meaningful capital rotating for a long-term position into the industry. And I just think you're crazy to bet against that. So yeah, I don't know. It'll be, for me, it's whether or not it's a sell the news event will be strictly based on the time between announcement of approval and actually launched for trading.
So the Bears aren't on, like, they are based in evidence. Like, I saw a couple charts, the gold ETF and a few other ETFs where up until announcement of approval, they, rip, and then announcement of approval, a nice decline followed by, when trading starts, they resume to their price at approval and then some. But I tend to agree with you also. Like, I think crypto is different. I think Bitcoin's different. I do think we see a lot of people sell the news, but I don't think it has a material impact on price. Obviously not financial advice. I have no idea. And I think that I would not be surprised if we only saw up only after the ETF, especially because it's not the popular thought. The popular thought is that it will be a sell the news event. I don't know if you saw, but Westy and I placed a little bet today. We did an over under. I said 4 business days or less after the ETF approval headline prints until ETF trading starts. And he took the over. I took the under on that. So I don't know if that's relevant information to anyone.
So wait, do you hit if it's 4 days, or so it's like 4.5 days basically?
So the 4 business days after. So if it on a Friday, if it prints on a Friday, then any day up until and including Thursday.
Okay, so including. All right. So there you go. I think I have literally no idea. I'm completely guessing. So I'm gonna take your side because I want you to be right.
Yeah.
Yeah, I just wanted to add that, I mean, like, this is probably the largest, most positive regulatory event this industry is gonna see in 10 years. I mean, like, seriously, just like close your eyes, wake up in 1 year, and like you just make it. Like, it's that simple. There's no need to like think like, oh, is it gonna be a sell the news event? Blah blah blah. Like, don't bother, man. And also, I think another interesting thing to watch would be gold ETF AUM. I don't know whether this will make any sense at all, but it'll be interesting if you see like an outflow out of gold ETFs while Bitcoin like ETFs increase in the AUM. Obviously, like either way, the AUM of spot Bitcoin ETFs is going to increase, but it'll be very interesting if we see like a decrease or a significant decrease in like the AUM of gold ETFs.
Interesting take, actually. I would guess not over the, like, you definitely, I'd be shocked if you saw some sudden moves. But if you come back in 2 years and plot those, like the AUM charts of all gold ETFs and all crypto ETFs, or even just like normalize it for units or something, that would be very, very interesting to see if there were inflows and outflows. But maybe that's a good place to leave it for this week. We jammed on a lot there. That was a really fun episode. So, guys, thanks for hopping on. And to the listeners, we will see you all next week.
Hey, everyone. Thanks so much for tuning into today's episode. We hope you really enjoyed it. Wanted to take one more moment to remind you guys about our upcoming 2024 Digital Asset Summit in London this March. Seats are limited, so be sure to hit the link in the description and use promo code 0x20 to save 20% off on your ticket. We'll see you in London. Be sure to hit us up if you plan on attending.